In the previous video, I was discussing how to manage South America political risk. And in this video, I will discuss the countries that have been by far the largest in my portfolio, Brazil. Saying that the Brazilian stock exchange had a tumultuous decade is quite an understatement. It was pretty much more of a roller coaster. In 2008, 2010, the country was coming at the top of a commodity cycle and then fell victim to what I call the economist cover curse. This is when the magazine of The Economist figure your country doing extremely well, which is usually forecasting an entire lost decade. Before getting started on actual investment discussion of Brazil, let's just discuss the country in general. Most of Brazil's population is located on the coast, with most of the agriculture done in the inner island. It's by superficie the fifth largest country in the world, and it makes up almost half of South America's population, making it the seventh largest country by population in the world with 200 million people. And it has a slightly aging but stable demography. Its GDP is 2.1 trillion and $10,000 per capita. Overall, the South region are richer and more developed, and this correlates with the racial divide, with more descendants of slaves and native in the northern states. When it comes to Brazil economy, Brazil is a serious industrial power, with 29% of its GDP coming from industrial activity, something much higher than most Western European countries or the US. This is in part due to industries transforming raw material into semi-finished products, like, for example, refined sugar or aluminum, and partially a strong domestic and regional base for consumer goods like cars and appliances. But when it comes to export, Brazil is very much just a commodity superpower with a very strong presence in agriculture, timber, metal, and energy. And most of its industry is mostly focused on its domestic market and a little bit its neighbors. So when it comes to agricultural product, Brazil food production has multiplied its value by 8-fold since the 1960s. It is ranked globally number 1 in sugar, soybean, orange, coffee, guarana, and chicken meat. Number 2 in tobacco, beef. Number 3 in maize, bean, pineapple, banana. Number 4 in cotton, watermelon, pork, and number 5 in cassava, manioc, and in coconut. And finally, number 7 as an egg producer. And obviously, maybe more controversially, Brazil is also an exporter of timber, both of cultivated timber and native Amazonian forest. And the timber sector is worth around $6 billion annually. A positive development is the growing popularity of agroforestry in the country, with timber grown in grassland together with cattle, with the tree providing shade and moisture to the grass, and cattle providing fertilizer and building soil. This is probably a change that will happen to the image of Brazilian agriculture, which is that it will progressively be seen not so much as destroying the Amazonian rainforest as something or more durable, sustainable form of agriculture. Another key commodity for Brazil is metal, and the mining segment of Brazil is especially remarkable for iron, bauxite, which is used to make aluminum, nickel, manganese, gold, and niobium. Brazil is also a large exporter of gemstones like amethyst, topaz, agate, tourmaline, emerald, aquamarine, garnet, opal, and so on. Speaking of the export, Brazil is the second largest iron ore in the world, behind Australia, and among the top 5 exporters of bauxite. And while illegal mining do happen in the Amazon, especially for gold, the issue is actually a lot less widespread than you might think, reading headlines. And in value, mining is just a slightly smaller sector than other commodity Brazil export, like food and energy. Speaking of energy, since the discovery of oil off the coast of Brazil, the country has steadily grown its oil production. And rosy forecasts of oil production growth predict Brazil could become an even bigger oil producer, but be warned that previously such forecasts have always fallen short. So I think what we should reasonably expect is a steady growth of production, but nothing meteoric yet. So with the oil production heading for 4 million barrels per day, this put Brazil just above the United Arab Emirates and Iran and just below China and Iraq. So it's fair to say that Brazil is not yet a true oil juggernaut like Saudi Arabia, America, or Russia, each in the 9 to 12 million barrels per day, but is becoming a really serious player in the oil market nonetheless. And Brazil currently consumes only 2.5 million barrels per day out of that 4 it produces, allowing it to keep growing its export, starting to shape seriously the outlook for global oil market. Most of the oil production is under total or partial control of the national oil company Petrobras, with some offshore blocks managed by other private companies, notably the Chinese CNOOC. Brazil produces a little bit of natural gas, but it's far from powerhouse in that sector, and it essentially mostly covers domestic demand. And talking of domestic demand, the total energy supply for the country includes actually a surprising amount of biofuel and bio-waste, coming mostly from the massive agricultural sector, especially sugarcane production, with biofuel representing almost as much energy supply to the country than oil. This raises the question of fertilizer import, as this level of agricultural and energy production is heavily dependent on imported fertilizer. Those imports represent no less than $16 billion per year, out of which $4.4 billion are nitrogen fertilizer, which should be essentially considered as transformed natural gas and should be qualified as an energy import. And Brazil is the number 1 in the world importer of nitrogen fertilizer, getting it primarily from Russia, China, Qatar, Nigeria, and Algeria. And for that matter, also 95% of its potash is imported. The country is looking to reduce this dependency, but for now, as long as the domestic natural gas production won't rise, it will probably be still somewhat dependent on import of fertilizer. Even if investors warmed up a little to the Lula presidency from the low point right after the election, predicting a communist takeover, we still have a general focus on the so-called Magnificent Seven US tech stock, and emerging markets, especially the Brazilian market, trade at a deep discount. The strong presence of Brazil in sectors like commodities, fossil fuel, and heavy industry, all sectors out of favor with investors at the moment, do not help. As a result, I think this is a perfect hunting ground for value investors looking for low price earning ratio, special situation, and double-digit dividends, sometimes up to 20% plus dividend yield. So for this South America video on investing in Brazil, I will not go in the detail of each company, and at least not yet, because it is something I've been doing for my subscriber on my newsletter at eurasiancentury.com. But still, a common feature of the stock I have reviewed were usually a PE ratio in the 2 to 15 range, ideally single digit, and dividend yields ranging from 6 to 25%. And this also included the special situation stock and a high quality hydropower utility stock that can be used for inflation protection. So to just browse briefly the list without going into detail about why I like those companies, there is Petrobras, the national oil company. There is Braskem, a petrochemical company, which is one of the largest in Latin America. There is Minerva, which is a massive meat processor that recently acquired a lot of assets from one of its main competitors. There is Brasilagro, a company which I own indirectly through a share of the Argentine Cresud, and which own a lot of farmland in Brazil. And there is Copel, this hydropower utility company, and Vale, a massive mining company, especially in iron. And finally, there is Nubank, which is an interesting fintech or financial technology company in Brazil. So overall, I think Brazil is a very interesting country to invest in, partially because I expect the commodity super cycle going throughout the 2020s, and partially because South America is dramatically undervalued even at current prices for commodities and the general economy of the country. Considering the general forecast for a rebound of Brazil and South America at large, we can also expect that a lot of consumer goods and energy demand will rise during the upcoming years in the region. That's it for today. I hope this is informative for anybody interested to invest in Brazil. Next video will cover Argentina, and the one after that will cover Colombia. Have a good day and stay invested. If you like this content, please subscribe to the channel and consider subscribing to my Substack newsletter, link in the video description. I publish a free article approximately once per week and a premium report once per month. Until next time, stay safe, stay informed.